Well, Oyen, we actually foresaw this about 2 years ago when we registered the rights issue on the shelf for 40 billion naira. And we did not bring it out last year because we felt that the economic conditions and the climate were not ripe for that, but we had it ready and waiting. And now that we have some stability and transparency as to what the future economic climate is like, we felt it was opportune to raise this rights issue so that fundamentally we could lower our debt and put ourselves in a position to capture the growth going forward.
Now, one of the reasons for the rights issue, as reported by the media, is to exploit value accretive opportunities. Can you give us an insight into some of the opportunities Flourmills is pursuing at the moment?
Well, I think, Oyen, we have invested over 150 billion naira in the last 3 to 5 years. So when we say take advantage of opportunities, I think the rights issue really here is to reduce the debt level so that we are poised to capture, with the investments that we have made, the growth. In other words, we have built the facilities, we've got everything ready, everything is moving and starting, and we're poised and ready to go. So we're going to capture opportunities in the market in terms of growing our position and our market share. We're going to capture growth, we're going to capture new products, new developments, new routes to market, and be there ready for the consumer as we go forward. And our model is a little bit, it's important to note that our model is a consumer-faced organization. We're a food business, a consumer-branded and B2B branded business, which is supported by world-class processing operations and also by aggregating our supply chain and raw materials, which we are starting to do to a much greater extent internally. So it's a kind of, it's a forward-facing consumer business which has world-class processing and world-class supply. And the focus has been over the last 2 or 3 years to focus internally to secure a greater and greater percentage of our raw materials from internal supply.
All right, let's tell us more about your presentation on the floor of the Nigerian Stock Exchange today and your thoughts on how investors have responded to the rights issue.
Well, I think the investors have responded very well. I'm not taking any calls from investors. They all want shares. So I think the response has been very, very strong. You know, we issued the rights at 27. The share price was trading at 34 today. So we expect a very strong demand. The overseas investor will support whatever, if there is any shortfall, which we don't think there will be, but the overseas investor is there to buy whatever the the rights issues that are available. We don't think there will be any, and we think it's a tremendous opportunity and tremendous value proposition to buy FMN PLC shares.
And Nigeria's economic environment has been tough over the past 2 years. What was your experience of this, and what are your thoughts on the current economic climate?
Well, the last 2 years have been very, very difficult on everyone in the country, on consumers, on every single person, organization, individual, or otherwise have had a very tough 2 years. The world economic climate, price of oil has created that. I think we've gone through the belt tightening. I think the last 2 years have been actually very formative. It forces everyone to look at their costs, review their costs, see how they can supply chain, do things differently, not depend on imports. So I think all these things are very, very positive foundations. Sometimes, you know, if you're too heavy, it's time to go on a diet. Nobody likes to go on a diet, but once you go on a diet and you get yourself in shape, it sets the stage for the next level. And I think we're at this critical juncture. I think the economy has gone through its worst. I think we have a good horizon towards the future. And I think the economy is poised to grow in a very positive way. And here I would urge that in that growth, it must be using the same sustainable mechanisms growth, in other words, not depending on imports, but developing an internal supply chain and internal growth, because that fuels additional growth. So I think the economy is poised to go forward, and if we learn from our lessons of the past, we must generate GDP and income from internal growth rather than from an import-based economy.